Hello, my name is Katie Wantock, Agriculture Agent for UW-Madison Division of Extension in Dunn County. Today, we're going to be talking about working with your lender. Low commodity prices and increasing debt levels are placing some farmers in serious financial distress. This video series will discuss how you can work with your lender, from learning about the 6 C's of credit that a lender may consider during your loan application, to identifying steps to complete your loan application and establish a relationship with your lender. Remember, lenders will collect financial statements and determine ratios and measurements that allow them to understand the strengths and weaknesses of a farm and to benchmark them with other farms in their peer group. Another way of looking at the ability of a dairy farm to meet its debt obligations is by looking at the total level of debt per cow. While the debt to asset ratio measures overall debt position of the operation, debt per cow relates to how a manager would repay the debt. Debt per cow may increase during an expansion. However, further profitability and cash flow analyses must be done to verify that the operation can continue to operate at an increased level of debt and look to reduce debt following the expansion. Some lenders may also calculate debt per hundredweight of milk. Similar measurements under review for dairy farms may also include purchase feed cost per cow per day and break-even milk price, which gives the manager an indication of what milk price they should be budgeting for. Break-even cost of production should be calculated and can be done on a whole farm or an enterprise basis, such as cropping or dairy enterprise. Calculating break-even cost of production per enterprise allows managers to determine the price needed to maintain a profitable enterprise. Lenders have to consider all possibilities and must plan for the worst-case scenario. In the case of a loan, what can the lender turn to in the event the business fails? If you are unable to repay the loan, how does the lender get their money back? Collateral is the land, equipment, machinery, livestock, and other things of value that a lender can hold as security for a loan and repossess if the loan is not repaid. The value of the property being held as security is an important factor. Lenders will likely require their own appraisal of the property or other assets. Often, assets are not valued according to market value, but at what a lender can get for the item if they have to foreclose or liquidate. That often means the lowest commodity price for crops and livestock and a severe discount on equipment. Remember, lenders are not in the business of operating the farm business and/or buying and selling farm products. So the lender may not get the best price on live animals, crops in the field, perishable or repossessed goods. Also, most lenders have policies regarding loan-to-value ratios. For example, lenders might only loan 80% of the value of a parcel of property, or 25 to 50% of the value of a particular piece of equipment. Other lenders require 150% collateral because of the cost and losses incurred in liquidation of the collateral. The kind of collateral is important too. Lenders may ask that you secure the loan with your house, on the theory that you will be less likely to default if your home is at risk. Be sure to ask what the lender standards or loan policy is so you have a better understanding of their underwriting of your loan application. Finally, the lender will assess your request. Is the decision right for the lender? What is the farm operator's current risk exposure? Will this impact any future loan requests? Is the decision right for the borrower? Will this loan application improve the farm operation now or in the future? Is the farm operator able to handle additional risk? Be sure to allow time for the lender to make a decision on your application. They can be a good source of sound advice and counsel when reviewing credit requests. Your lender will make arrangements for you to sign the necessary loan documents. Be sure your lender provides written documentation that confirms the details of the payment agreement and that you are clear on what the loan terms are. If you need help working with your lender or understanding your options, you may want to reach out to a professional. Seek advice from credit counselors, lawyers, accountants, Wisconsin's Farm Center, or other trusted agriculture professionals.